We're talking markets with Tommy Grisafi from Advanced Trading, ATI Pro Media. Tommy, crop report day today. A lot of excitement. We saw right from the beginning the high frequency trade kicked this market into gear. We had a bit of a pop right from the start. It didn't hold, but tell me, what did we see in this report today?
Well, a lot to digest, and your red background is the theme of today's report. Now, I know you didn't plan that. Next time we do this, we'll get you a green background. We'll go back up. But yes, Don, the high-frequency traders gave the farmer a wonderful opportunity. Soybeans exploded from down 10 to up 20 within 2 seconds of the report. That is high frequency grabbing that yield number. The high frequency traders looked at that 50.9 and said, wow, that's bullish. But then as you digest the numbers, they also grabbed the what do I have here? 175.1 in corn. Oh, that's bullish. But wait, there's more. Demand's down in corn, beans, wheat. This is down, that's down. They didn't adjust for the Ukraine. And that data is just a little bit old, and we could talk about that. But the initial spike up was nice to see. In the end, the market's closed almost on the lows in corn, wheat, and beans. As we end this week here, it is August 11th, and we are a lot closer to growing a big crop than not growing a big crop, Don.
So this report is as of August 1, right? They use satellite imagery. There was farmer surveys, but no boots on the ground with this report.
No, not to my best understanding. Now, the independent crop tours are going out. Pro Farmer Crop Tour, sometimes you and I go out. Of course, we encourage all the farmers, go out in your own fields, see what the heck's out there. But at this point, no, they're not really pulling ears. Now, what we don't know, and it's interesting, is how much are they using of that satellite image versus how much they're using versus other thing. We don't know how they what all goes into the soup when they're cooking it, but we do know that this is a more official number, and we'll get more official numbers as boots go on the ground.
I guess the point is we've had plenty of rain across a good part of the Corn Belt since this report was, since these numbers are put together.
We have done. It's I've been very consistent here on these on ATI Pro Media that I have backyarditis. The weather here, it rains all the time. When you get a text notification saying the local pool in the subdivision's closed, it's either raining or too cold. And it's wild to think of how hot and dry we were in June. But the farmers been saying, and they've been consistent, if you're going to have a drought, have it in the spring. Now, the old myth, plant the dust, the bin's a bust. Unfortunately, for some people, they did not receive rains just in time. I heard from a large Illinois client today. He said, you know how I told you my crop was really big. He goes, I got to tone it down a little bit. We're having quite a bit of tip back. So maybe that heat did affect things as the USDA starts to drag down their numbers. But as they also tone down demand, which we knew that's been happening, we knew that's been something that's needed to be talked about. We don't need to have a record crop. A record crop puts corn in the lower fours with the 3. Just an okay crop does the marketplace just fine.
So do we need to see these markets go lower to stimulate demand in this marketplace?
Well, if you want to extract the positives out of today's report, yes, lower prices bring in demand. The truth is, and hate to say it, there's not a lot of people in the world with interest rates so high who can afford $6, $7, and $8 corn. But cash corn with a $4.50 in front of it, that's something that's going to fly off the shelves like whatever thing we say, like hotcakes, right? Is that the saying? It's going to fly off the shelves like hotcakes. Yes, demand's going to pick up. We've seen China in for beans lately, Mexico, other countries in for corn. We're going to get back to the basics, Don. We're going to get back to carries, bushels, bins, basis. This wild volatility is coming to an end. I had sent clients a text saying that this could be the nail in the coffin.
Well, that you talk about the carry out for corn. While we did cut yields and some of those kind of things, that carry out is still pretty burdensome.
It is, but I think in the end, optimistically, demand will kick in. We can use more for a lot of different things. It's funny how much more you can tolerate 450 corn than 650 corn. So right now we'll play that, oh, we have too much corn, but we might throughout the year gobble that up. Now the big wild card's Ukraine. Will Ukraine be able to plant crops and consistently export them? They're not using a lot of their crops domestically. They are a giant producer of great products and sell them. They're going to have a hard time selling them overall over the next few years. We have no idea what's going on there. We go home on a weekend like this where the markets sell off on the lows, and if you and I are recording this on Monday, we may get a headline out this weekend where we all say, why would anyone be short grains at that level? Didn't you know this was going to happen? But the this is going to happen, those events where grains spike up on these Sunday night or during the week headlines, those have become massive selling opportunities. No different than what we talked about in the beginning of the show. Corn spiking up and beans spiking up on a high frequency trade number on a USDA on a rainy August day was a selling opportunity.
Spring wheat was above trade expectations when we look at production. That certainly doesn't help because there is a lot of wheat all over the world.
No, and they did lower North Dakota's yield. I did get that little sliver from my coworker, Brian Bastine. We recorded a video, ATI recorded something with Brian Bastine and Michael Reginelli. And Brian mentioned that the USDA lowered North Dakota's yield. But with the border trade wheat selling off in KC, that wasn't just enough to get spring wheat. I mean, it kept it a little elevated, but not enough to really get people too excited.
So with all of this, you talked about interest rates. That puts more onus on what's happening with these outside markets.
It does. I mean, the old days of store and ignore. We are not 3% interest rates. You and I, we're going to become the broken record. Remember these numbers, 9, 10, 11. That's what you're looking at for operating. You're either getting paid 5% from a local bank or you're paying. It's an opportunity cost. There's still plenty of capital in ag land. But if you throw grain in a bin and it becomes a depreciating asset, what is the opportunity cost on that?
We're sitting here August 11th. It's not going to be very long, and we're going to be thinking about harvest, especially when we push this crop as much as we did with the heat units we saw in early summer. What do these guys have to do to get tuned up for harvest, particularly with their market plan?
Well, the best thing you could have done, just like our health, the best thing you and I could have done to stay healthy is take care of ourselves when we're younger. And although most people, and tease ourselves, when do we go to the doctor, right? We go to the doctor when we don't feel good. Best to go to the doctor when you're feeling good, best to sell and protect when prices are better. Of course, everyone's going to say they didn't know they had the crop. It was hot and dry. That's where that layer of puts comes in. Now, if you miss the boat on 23, there's not as much we can do. We can always stop the bleeding. The number one thing to do is get in control of 23. Start thinking about D's 24. We did a lot of hedges before the report, during the report. We'll continue to do hedges as you see that D's 23, D's 24 widen out, where D's 23 is trading close to 20 cents under D's 24. Puts like D's 23 at like a 490 and a D's 24 at a 510. If you think prices are bad now, then start thinking about next year. One last thing before we wrap this up. Fertilizer is not nearly as high as it was last year. So I ask everyone watching this to check on their fertilizer prices and start working the mathematics of what they truly have going on for 24 and even think about 25 moving forward.
Do you really have clients that are hedging for 24 and 25 at this point?
We do. And when the market spikes up, some of them are very aggressive future sellers. When we have these Ukraine war headlines, some of them have to send in more money. But most of those people, if not all those people with where corn is now, have a very profitable hedge. Now, coming in, moving forward, it might not be that way in 5 minutes, 5 days, 5 months, but they got ahead of it and they said, I do not want to live through that pain. Big bull markets and grains and ugly. Argentina, Brazil, the whole rest of the world's gone in after us. Now, Ukraine's knocked out, but that put so many other people in the grain game. And in the end, if you think you're a good grower and you know one thing for sure, you have zero, I repeat, zero crop insurance for 24 and 25.
Very good point. Obviously, these markets very volatile. We need to make sure these guys get in touch with you when they have any questions. How do they do that, Tommy?
Yeah, give us a call, 1-800-664-4383. I ask everyone who's watching to subscribe to the ATI channel. Also, click that notifications button. We did a great live stream today with Michael Reginelli and Brian Bastine. I'll get that forwarded out to everyone, but those guys really know their stuff. Michael working with the commercial elevators, not growers. Of course, Brian and myself working more with the farmer marketing side. A lot to digest, but in the end, rain makes grain. And I hate that adage, but it is true, my friend.
Tommy, appreciate the chance to connect after this report day, and wish you a good weekend. We'll talk again next week.
Thanks, everyone.
Tommy Grisafi, Advanced Trading, ATI Pro Media.